It's Wednesday, that means it's DeFi time at BNC. Let's analyze some charts. My favorite thing to do, you know, those fundamentals, they can get out of here. It's all about the charts for me. Let's take a look at dominance. A mostly useless metric all of the time. If anything, it's a weather vane for what's going on in cryptoverse, crypto land. This does include stablecoins. Just keep that in mind. But we are quickly surging to the core on dominance here as BTC continues to flounder at or near all-time highs as some of this stuff pulls up, outperforming BTC in the near term. So since really the end of March, kind of since Pancake and BSC became a thing, all of a sudden we're in a free fall on dominance. Now, I'm here to tell you this was expected because we're below the 200-day moving average on dominance, and so long as we are below the 200-day moving average, it is altcoin season. Now, does this mean I don't think there's going to be a catch-up trade on BTC? I do think there's going to be a catch-up trade on BTC, so that's why I am allocated the way I am in my personal stuff on Enzyme and whatnot. I fail to believe that BTC will just continue to do nothing over the next few months as ETH pushes all-time highs. You know, we can talk about, here come the fundamental people. This is EIP 1559. This is the next best thing since sliced bread. The flippening is inevitable. Great, fine. I can't allocate personally 100% ETH. It's just not in me. I don't see that as a reasonable allocation. But I can understand those who do. That's where I'm coming from on dominance. Yeah, it's pretty funny. This is reminiscent of the ICO era for sure. This is going to end in massive blood for people who have extremely high paper gains and are unable to take profit, are greedy, are unable to slowly let go over time. How this works is you make a ton of money on paper and then you lose it all because you think, oh, it'll bounce. I'm not saying it's going to happen anytime soon. I'm just saying that's how this stuff plays out, and that's why dominance regains. It's not because BTC doesn't fall with it. It's because all this other stuff falls 80-90%, right? If we look at the total market cap, total is the ticker on TradingView. This includes BTC, but we've had an interesting series of bearish divergences here, pretty obviously, since January. Higher highs in price, lower highs in RSI. We've also had a continued series of hidden bullish divergences, higher lows on price, lower lows on RSI. So it's an interesting little battle we've got going on here. If this does make a higher high, which it looks like it wants to, it looks like everything's going to recover quite nicely. What you don't want to see is a continued bearish divergence. Definitely not. You want to see a break of that trend for sure if this has real strength. And the theme of this video is basically back on track. We had a little bit of a bumpy road, busted out tire, we had to change the wheel, and all is good now. We had a spare in the trunk, and we're back in the bull trend. This is DeFi perp, and how this generally works is you're either bullish, bearish, or neutral, and your neutral phases are consolidation or accumulation, either bullish or bearish. And it's looking more and more like we've had consolidation into January, markup consolidation from January, February through March, and almost through the entirety of April. And it looks like DeFi perp is ready for another markup phase or markup type phase. Now, the consolidation certainly looked more bullish going into January. This just looks like a mess. It's not really anything, but just a range that it's trying to break up from. You could say maybe there's a W here. That'd be fine. For most of these charts, I'm just looking for higher highs just everywhere. Just measure this out. The simplest way to do any TA on this type of stuff is define the range, pick the high, pick the low, and your 1618 to measured move, basically double from the bottom, is where you're looking for targets. If you're trading, low time frame, high leverage sort of situation, this is what I'd be looking for. I'd be longing the breakout, and the target would be here. Stayed above the 200 or the 100-day moving average in this case, because this is the 12-hour. But anyway, that looks fine. Uniperp also is another variation of this consolidation, accumulation, markup, consolidation, accumulation. Looks definitively like it's ready for markup again. stayed above the 100-day moving average, and this insanely clean diagonal, just it's like some bot is just bidding that diagonal over and over again. And you can even see it a little bit out here as well, but W here, higher highs, new all-time highs for Uniperp. And the Uniperp, how that's different from DeFi Perp, is this is the top 100 coins on Uniswap, whereas DeFi Perp is more inclusive, I believe. Don't quote me on that. I should know what is what here, but it'll be pretty obvious when I'm looking through these charts which is which, as far as was it a ascending triangle type of consolidation, or has it been just a ranging consolidation? Here's Link USD, the least correlated amongst any of the quote-unquote DeFi things. It's been just continuous up move, no real commentary other than just as expected. It's in the pitchfork, it's in the range. It is above the 200-day moving average. I like 60 to 80. 80 is the moving average multiplier high in the red here. 60 is the yearly pivot. So I like 60 at a bare minimum within the year. Roughly a 2x basically is what I'm looking for at this point in time. Looks fine. No extra things to say. It's kind of the easiest thing to trade, really, because it's just buy and hold. Just a never-ending buy and hold. Here's Band, back on track. It had this cup and handle punctuated equilibrium situation where it looked like it was ready to go, pulled back, probably reached the target on a wick or something. But I like this for continuation. It has had a series of consolidation patterns that have broken up, inverted head and shoulders, a flag here, giant cup and handle here. So all this looks like it's ready for continuation. And on the BTC chart, this is the 2-day Band BTC chart, an insane edge-to-edge move. This is a 2x projection based on the 50% from the high to the low. How this works is you put in a high, you sell off super quick, put in a low, and then the cloud starts to fill in and get super thick. And then your TK lines get closer and closer. They cross, they might crisscross. It may or may not be bearish continuation. In this case, it wasn't. You had several TK cross recrosses, and right now, the bullish TK cross below the cloud is giving you its blessing for an edge-to-edge move through the cloud. So there's a congruent bullish TK cross with this edge-to-edge principle on the 2-day. It may take a while, it's the 2-day, so keep that in mind. But paired with this inverted head and shoulders, which I think is very much real, looks like Band BTC is going to do quite well. And it's Q2, alts do well in Q2, dominance is dying off. Pick your narrative, but I like this. I like that chart. Maker USD, I don't really have anything to say other than markup. Again, consolidation, markup. I think there's just a massive repricing going on. I don't think anything on the chart is necessarily going to show you that. They have a buy and burn mechanic. That's probably playing a big role here. 10 billion TVL got crossed for Maker for the first time yesterday, which is kind of insane when you think about it. So I think that'll continue to do well. Nothing really to say there. Comp, all-time highs. Had this inverted head and shoulders. AAVE, all sorts of patterns here, right? Just a range, a mess. Comp is always going to be noisy on the intraday, so be careful with that if you're trading on high leverage. But I like continued bullish vibes here on this chart. It reached its target based on the range, so it may consolidate, but overall it looks like continuation very likely. AAVE back on track as well with the previous inverted head and shoulders at the 50 EMA that looked like it was going to break up. The entire market broke down, and now it's back above that high, and looks like it's essentially going to retest all-time high plus at this point. So I like 620, I like 740, any 618 above this measured move at this point in time. And we can see how that played out previously, how it had this like falling wedge characteristic around the 200-day moving average, and then slowly just, again, it's either consolidation, accumulation, bullish or bearish, and you can say all of this represented bullish accumulation or bullish consolidation, and you had your markup phase. So we're in a very potentially similar type of situation for most of these charts. At this point, it's hard to be bearish on anything that looks like it's ready to continue to break all-time highs. Here's a uni on the 8-hour, held above the 50 and 200 period EMAs on this chart. It's continuing to hold within this channel, but definitely looks like it wants more. This is what, an all-time high at this point for uni, and what the airdrop was down here somewhere at $4, and it's now at 42. or whatever the airdrop was. I don't even know, but very interesting how this chart is working out. Interesting when you compare, Uni to Sushi, and you look at, here come the fundamentals talk again, the TVL versus Uni and Sushi, and the fully diluted market cap versus Uni and Sushi. It suggests that Sushi needs to fill the gap, as if you will, regarding TVL and diluted market cap. Basically, it gives Sushi like a 10x potential based on Uni's fully diluted market cap. Tokenomics play a big role over the long term. I don't know how necessarily important they are in the near term, but Uni to me looks much more bullish than Sushi. When I see stuff like this, this rounded, it's not a rounded top, it may not be a rounded top, but this curvature to it, it reminds me very much of Zcash, which there's actually some statistical bearish biases for this. If you scan, somebody did a paper on it. If you scan hundreds of charts over hundreds of years, you can see that this is typically a bearish chart versus DOT, which I don't have up, but is typically the opposite of this. It's typically bullish, convex, concave sort of situation. Curve, cup and handle range, again, back on track, looks fine for continuation. None of these charts are particularly exciting. Maybe the ascending triangle charts look the best to me as far as like pulling the trigger. Balancer looks fine for all-time highs, bullish continuation. It's got 2.0 coming, or whatever 0.0 coming, some upgrade in the near term. So that looks good for bullish continuation. BNT is interesting. It's had a series of really strong daily bullish Kumo breakouts currently inside of the daily cloud. So if this, like AAVE, pulls up out of the daily cloud again, it'll be a strong long entry signal. So right now it's kind of in no man's land, which is why on the fund I've allocated 1% of the fund to BNT versus everything else. It's probably the most neutral next to REN, but in REN's case, I'll get to that in a second, REN mean reverted completely, whereas BNT hasn't yet mean reverted. So if a rising tide raises all boats, BNT will be fine. But if I'm just trading the chart alone, I'm waiting for a bullish Kumo breakout here, or a mean reversion to the 200-day moving average. One of the two. ZRX is a giant hot mess, but still bullish on trend. Again, you had that cup and handle characteristic, got absolutely hammered very quickly, like everything else, and it's sort of back near highs once again. I think on a lot of this stuff, Doge is the great example of this. Not that I'm expecting 1000x on some of these charts, but like Maker, right, is just a buy and hold. And if you believe that you're bullish on the prospect of DEX aggregators, or you're bullish on lending and borrowing, whatever it is, you're bullish on Sushi because it's better than Uni, pick your narrative. I honestly think the charts are irrelevant to you because it's mispriced and it's going higher. Now, I can say there are technical evidence one way or the other, and this doesn't really look compelling for much of anything, right? But, some people are on board this ZRX is mispriced narrative. It's going to 20 plus, right? I don't know about that, but on trend, it looks okay in the moment, right? And everything else is moving up. So I expect ZRX to move up with it. 1 inch typical ranging stuff we're seeing across the board, back on track. It is above the midline of the range. It is looking like it's ready for all-time high retest, and certainly looks better than ZRX, I guess. I mean, they're both kind of, highly range bound since February. The more ZRX than 1 inch as a DEX aggregator can go multi-chain, just the better for everybody, the better for the coin, the better for the ecosystem. Because if I'm a trader or consumer, I don't care which chain it goes through if I'm making a trade, right? If I can go through Solana, Tron, it's like the Tether thing, right? Tether was on Omni first, then it went to ETH, then it went to Tron, then it went to EOS. Like, if I'm moving money around, I don't care which chain it uses. As long as I get my money, it's secure. As long as the exchanges are happy with it, what do I care, right? So that's kind of where I am with the DEX aggregators. The more they can do, the better. As far as figuring stuff out with fees, the lower they can keep fees, the better. That's all people really care about. Here's Ren. So although it's bearish on the cloud, it is above the 200-day moving average still. It's bounced on the 200-day moving average so far. So it's signal-wise a bit mixed. But if I'm buying anything, I'm buying stuff like this where I'm more confident that, okay, you know, I'd rather not buy at highs. I'd rather wait till it just gets faded back to the 200-day moving average and then at least start accumulating a position at that point in time. You could maybe argue a falling wedge here, depending on how you want to think about that. So maybe of everything, I'm the least confident that this will have bullish continuation. But as far as an entry is concerned, at the 200-day moving average makes the most sense to me. SNX, very similar situation to kind of AAVE and BNT and REN. It had its 200-day mean reversion completely. It's had falling wedge potential. It's had inverted head and shoulders potential. It's had bullish Kumo breakout, TK cross, recross potential. All of which thus far has failed, and this may take additional time, but overall it's very reminiscent of August to January, where it took time, but it eventually had its bullish continuation. So maybe late Q2 is when this is more expected to take off, and I'm certainly more confident in it if it's above the cloud. But you're looking for a very similar picture here, just history to repeat itself, definitely. Wi-Fi, I don't really have much to say. It's bullish on trend, I guess. I think the price is obviously ridiculous per coin. That's going to price a lot of people out just because they're not going to realize you can buy a fraction of a Wi-Fi. It's above VPVR levels. It's kind of near all-time highs. If you want to think about fundamentals, they did some stuff, right? Again, like for me, the chart tells me where the fundamentals are happening. That's why I just don't pay attention or care too much about fundamentals for some of this stuff. But it's hard to be bullish on this relative to most of DeFi, just because of the price, honestly. Dodo, we're going to mix in some random low cap coins. This one is ranging below its range. Not a lot of trade history here. I don't know anything about it. It hasn't had a history of any bullish anything yet, based on what I can see on Binance anyway. So this looks like an avoid for me. You know, I need to see some sort of bullish wins or something, right? Like this, I wouldn't want to sit in this. I wouldn't want to buy this. This just isn't for me. Hedgic, same thing. Just really no history of strong bullish anything. Maybe it's still in distribution. I don't know. But again, not a coin I know anything about. UMA. This goes back to this convex concave conversation where stuff that looks like this is typically more bullish or leads to more bullish continuation. You could argue you get some of that here as well. I remember watching it back here thinking, you know, this at the time was just so volatile and didn't it looked like there were whales just playing games with people, right? And then they had some fundamental thing happen and you get stuff like this. So, you know, if you're bullish on UMA, who am I to tell you not to buy and hold, right? So at this point, it's setting itself up for another potential type of bullish continuation. Probably not a 2-day spike to infinity, but it does look pretty good for bullish continuation. Alpha has had a series of bull moves, a series of bullish continuations. This does not look bullish, though. This is basically since late January, just kind of languished and sold off. It's getting a 12-hour 5200 cross pretty soon, so not something I'd particularly want to sit in. It's setting up for a potential Adam and Eve, a potential inverted head and shoulders here. You can see it had a failed Adam and Eve here, VU, really nice kind of textbook Adam and Eve that didn't really lead to much of anything. Again, here, this is what you're sort of expecting when you see an Adam and Eve, just the literal bottom and then blast off. So nothing too compelling here for Alpha. Melon, this is the Enzyme token. Got to be honest, not too sure what the purpose of this token is, but like Balancer is sort of this DEX non-custodial portfolio management type of situation. And both charts have this ascending triangle quality to them. This has a potential cup and handle quality as well. 5200 are favorable for bullish continuation. So overall, Melon looks fine for continued bullishness into Q2. And lastly, I'll just mention the managed DeFi portfolio on Enzyme, Enzyme.Finance. There'll be a link in the video description below. How this works is you can see everything I do, everything anybody does as far as deposits, withdrawals, allocations. You can sort by what's allocated. You can look at the trades I make. You can see that I deployed a bunch of capital into a bunch of stuff yesterday. Basically, the reasoning for that was gas prices were down and DeFi didn't die. It's hard for me in a fund like a portfolio like this. It's hard to buy knives on stuff that's down 40% because if it's really game over, I'm not saying it had potential for that, but if it was, right, like, and you're down another 40%, you just have to liquidate everything. So I have to make sure that at the very least, DeFi isn't going to explode on that day, right? That was my rationale anyway for not buying the dip on most things at the time. You can see my previous trade was 422, 421, 420. So they raised the gas ceiling. DeFi didn't disappear. It looks like we're back on track again, the theme of this video. So anyway, if you want to participate, you can connect the MetaMask or equivalent wallet. And there's no mins, no maxes you can pull out at any time. So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.